Now, to kick off this panel, please join me in welcoming the chair of the CMVM, the Securities Market Commission here in Portugal, Mr. Luis Lagina de Sousa. Yes.
So, good afternoon to all. My first words are to say thank you to Gabriela and to IESBA for the invitation to attend this international event. I would also like to greet all the distinguished members of this panel, which I have the honor to open, as well as those who are present here and those following us online. To address this pressing issue of financial crime and the role of accountants, I'll do it from the perspective of CMVM, the Portuguese Securities Market Regulator, which supervises both the capital markets and as well as the auditors. But although our focal point are the auditors and audit firms, the insights that are taken from them, they are also applicable to the entire accountants community. And to start with, I would like to share something that, although it is not supported on scientific data, it corresponds to a very strong belief based on the interaction I have with my colleagues from other national authorities, especially within IESBA. And the strong feeling, the strong belief is that those who have a responsibility on supervising and ensuring well-functioning markets, if they were asked to say in just one word, what is the most critical element for well-functioning markets, I'm quite certain that the vast majority of them would choose the word trust. And this means that financial crime, which is a structural reality of our time, undermines what is the single most important aspect for well-functioning markets. And it does so by defying, without exception, all systems of control and oversight, by defying being also very highly planned, by using legally valid structures and complex networks of opaque transactions that create an appearance of normality. Financial crime is also fragmented across entities, jurisdictions, and it often involves highly credentialed professionals. So as a result of the characteristics I've just mentioned, financial crime, they can be very difficult to detect and hard to address. And to confront all this, the traditional mechanisms that are based on transparency and control, they face a combination of technical, of legal, and also practical limitations. So the question we are facing is clear: how can we strengthen our defenses to prevent and combat financial crime? And to address this question, I would like to recur to an analogy based on what I heard from a very special person, which I had the privilege of knowing many years ago, and who unfortunately is no longer with us. He served Portugal in many ways, including as finance minister in a very difficult time of our history. And apart from having been a brilliant economist, he was also an example of unmatched humanity, integrity, and ethical behavior. I'm referring to Professor Hernani Lopes, which I'm sure that the Portuguese present here all know. Those who had him as a teacher were always looking forward to his lectures, because the way he presented problems and the solutions were real masterpieces. And there is one lecture, one of his lectures in particular, which I thought would be a very good proxy to address both the question we are facing and also the role of accountants. I'm referring to the lecture where he described what a country GDP was and what were its sustainable growth drivers. And although he described it in a way that I can not dare to get close, the essence of what he described, I think, can be summarized in around very simple but absolutely crucial elements. One element is that a country GDP is nothing more than the outcome of billions of individual decisions which are taken every second, every minute, every day, every week, and months and year. And this means that every little decision counts and every single step matters. And to ensure that such individual little decisions, they lead to the socially desirable result, they have to be based on very solid ground. Otherwise, instead of producing a positive cumulative effect, they can act against each other and produce the exact opposite effect. I believe this insight is quite powerful and applies equally to the entire corporate accounting and auditing. While it is in the company's responsibility to ensure that its financial statements faithfully reflect the reality, it is the accountant's role to represent the reality accurately. And this is done not only by staying up to date, acting diligently, and performing professionally, but also, and above all, through solid ethical behavior, which should guide judgments, decisions, and actions when providing services across audit, tax, consulting, and business roles. Each entry, each judgment, each verification contributes to the bigger picture of financial integrity and to an even broader picture of sustainable economic growth and well-being for the society. And this is why the role of accountants is crucial, not only when they prepare, they analyze and report financial information, but also when they act as auditors, providing assurance that such information is fair, reliable, and free from material misstatement. And because every judgment counts and no rule book can cover every situation, we can say that providing cutting-edge technical training, it is just as crucial as it is to foster a questioning mind, a strength of character, and the ethical courage to act under pressure. Based on CMVM's supervisory experience, it is also important to clarify what we consider to be the auditor's role. And to do so, it is also helpful to start by saying what we do not consider it to be. And we consider it not to be a criminal investigator nor a guarantor of the absence of fraud. What is expected of auditors when confronted with indications or signs of irregularities, whether internal or external, is that they document their judgment, justify the decisions taken, and act with the diligence that is expected given the nature and the complexity of the identified facts, and all in full compliance with the applicable standards. And these standards aren't something that can be applied just in part. They require full compliance. And for such full compliance to be achieved, we must reduce and ideally eliminate two gaps. One is the expectation gap, what the public thinks should be done versus what actually should be done, and the other is the performance gap. So what the standards require, that's the performance gap, versus what is actually done. Another aspect to be taken into consideration is that compliance with standards must be strict and verifiable. And this is where other less visible but also crucial steps make a difference. I'm referring to the vital work of professionals, professional bodies and supervisors in carefully monitoring and overseeing the accountant's work, whether in audit functions or in other roles. That is a vital thing. It is especially important that those with greater decision-making responsibilities, they incorporate the highest level of ethical standards into their practice, because their impact on transparency and on a culture of compliance is significantly greater. At the same time, the integrity of the financial system depends on collective capacity, including regulators, judicial and tax authorities, police and professional organizations, just to name a few. So we all have a duty to contribute to a culture of compliance to help eradicate crime, each in our specific role, each with our own individual choices. And although CMVM, in its capacity of supervisory authority for auditors and for the securities market in Portugal, has handled some very high-profile and complex cases, which allowed gathering a substantial amount of experience, I won't refer to any case in particular, but I would like to use our accumulated experience just to draw some important lessons about the challenges we face. And to do so, I will use my 1.5 minutes left to highlight what we believe are some key points of reinforcing the auditor's role. The first one, which I have also mentioned already, is to reduce the expectation gap and the performance gap. The second is to clarify responsibilities as reflected in the proposed revision of IESA 240 on fraud. The third is to consolidate professional skepticism as a central pillar of auditing. The fourth is about mapping economic relationships and flows, ensuring proper supporting documentation, and explain why each action was taken, especially in higher risk areas such as related party transactions, unusual fees, and non-recurring operation. The fifth is to integrate external data and signals into the audit process, such as media reports, analysis findings, or regulators' alerts. And the sixth and last one is to reinforce national and international cooperation to counter the institutional fragmentation and also to address cross-border illicit practices. I don't have time, and it was not the purpose to elaborate on these points, but I hope that they can serve as food for thought and perhaps stimulate discussion in the panel. But to conclude, my final words is just to say, and returning to Professor Hernani Lopes' lecture, each decision counts in the integrated effort to prevent and combat financial crime. And this means that the decisions of accountants really count, and the society and citizens, they count on them. Thank you.
Thank you, Luis, and good day to everyone here and virtually online. It's terrific that you're here to join us for this panel today. To state the obvious, we are the last panel of the day, and so you know what you need when you're the last panel of the day. You need expertise and you need passion. And that's right here in these three gentlemen beside me. Delighted to be with the three of them here today to talk about financial crime in sort of a broad spectrum basis. We're going to talk about a variety of different crimes that you may be somewhat or less familiar with. It includes tax crimes, it includes money laundering, it includes fraud. There's a number of different crimes that will be touched upon here today in terms of what they mean. Now, one of the things we've heard today several times over is about trust, and it can be, it's hard to earn it and keep it, and it's quick to be lost. Taking what Luis has said, it's the same with GDP. So when you look at the world's global GDP, there is a percentage of it each and every year that is lost to financial crime, and it ends up being money laundered, and it is a global problem. Another point that was made today earlier is that we're only as strong as our weakest link. With global financial crime, that is absolutely the truth. The money moves around the world digitally, seamlessly. It's very difficult to identify and to trace and to actually catch. So on that sort of background of what we're talking about here today, we're going to reflect back to the very beginning of today and Professor Duke's comment on what he called moral imagination. So we're going to take you into a journey of thinking about financial crime, what the bad actors in the world try to do, how they might utilize a profession to actually enable their illicit activities. Nobody is going to be doing that wittingly, we don't think, but it can happen unwittingly when people don't realize the transactions that are in front of them. And that's one of the other things I'd just like to say as an observation. The complexity and the sophistication that is involved in today's financial crime is something to be in awe of. We heard today about AI, we talk about technology, we reflect on it in so many positive and powerful ways that it will enable the business world and the globe. However, the bad actors will use it too. So that's what I say, exercise your moral imagination today, go a little bit to the dark side, think about what the bad actors will do and the threats to the profession. So on the back of all that, I'm going to talk to my good friend here, Jens, and I'm going to open up and Jens ask you about the importance of reliable financial and tax information, and from your own perspective and experience, how do you see the current state of play?
Oh, thank you, Michelle. It's it's a broad question. I will start with what Luis said. He talked about professional skepticism, and we are talking beyond audit services done by accountants in the tax arena, for example. It's about a critical mindset, having a critical mindset which is more or less the same, but in a different role because you're more advising than giving assurance. And I think it's very important to understand what is the role of a professional accountant in providing tax services as an accountant in public practice or supporting your own corporation where you are a public accountant in business. So a professional accountant in business. So by that, I think it's very important to see that the accountant is part of a broader financial ecosystem, tax system. And acting in the public interest in this respect is also very important to understand that the complexity of tax systems in your own country, but especially cross-border, is very high. So be a little bit aware as an accountant that you have to support your client or your employer in navigating through all these issues, traps, inconsistencies. So that's also acting in the public interest. But at the same time, you're also responsible as acting in the public interest to secure the proper funding of public services and uphold the health of our economy, this broader perspective. So it's not only serving the client interest, it's also a broader issue. And I would like to start also our discussion that it's crystal clear no CLA is there. So non-compliance with laws and regulation, there is no excuse for an accountant to be part of a crime. The difficult issue is being in this gray zone where you're not sure whether it's crystal clear a crime, yes or no. That's in theory very clear. In practice, it's the challenge. And here, the critical mindset is very important. You have to have all the facts and circumstances. You have to understand the business model, the issues behind. And because we have a more complex environment, these questions are also more complex. So you have to give a certain work effort, we would call in the assurance world, even though you are just an advisor, just in brackets. So I think that is perhaps the issue. And because later, if something is crystal clear, the accountant will be asked, why I haven't seen it? So it's important for your own safety and also for the reputation, whether you want to be associated with something you haven't detected. So I think that is the dilemma in which you are as an accountant providing tax services.
Right. Thank you very much. Now, Jose, your perspective on all of this is very important and it's unique and it's from a different vantage point. As a prosecutor, you have seen financial crime and the cases at the end result. And like our polling question that we asked, that was about the foresight of what do you see before you do something, what is it going to look like, and then the hindsight of when you see it in the rearview mirror and have a chance to evaluate it from that perspective. You're seeing a lot of hindsight. And so wondered if you could share with us your thoughts regarding the importance of the reliability of financial and tax information, and also what you see as the current state of play.
First of all, on behalf of the European Chief Prosecutor, I would like to thank IESBA for this invitation on the person of Gabriela Figueiredo Dias. It's very important for us because we are a very young institution. We were set up in 2021. And maybe my major contribution to this event would be not to deliver my personal assessment about the corporate scandals that are known by the public. The involved auditors could foresee previously what was happening and the possible consequences, but try to go to the risk assessment that, in fact, for me, it's the most relevant dimension of the situation. First of all, I think it's very important for us to establish common grounds. What is considered financial crime? Going back to basics, United Nations Conventions Against Corruption established provisions or request the signing states provisions regarding corruption, money laundering, and legal entities, liability of legal entities. If we go to the United Nations Conventions Against Organized Crime, again, we are talking about money laundering and legal entities. Based on my experience, for me, it's quite difficult to foresee financial crime without understanding the key role of the legal entities. And the idea of the legal entities, their financial statements, is and here is where it's so relevant, the role of the auditors and the accountants. Trying to use a little bit our figures, because once I joined this institution, it was possible to be confronted with several studies that were already delivered by the European Commission about, and I'm talking about the EU zone, sorry for the other ones that belong to the rest of the world, but this is the lab where we work, and it was possible to understand that it were estimated losses over 90 billion euros per year regarding the VAT revenue. So we are always dealing in EPPO with the protection of the EU budget from the side of the revenue. We're talking about VAT and customs duties on one side, on the other side the expenses, all the money that the EU taxpayers put in order to develop the European project. And we stumbled in surprising reality, because we were thinking, okay, this is white-collar crime, the VAT, and suddenly there is an assessment made by Europol regarding the serious crime threats in Europe, and this is confirmed with the data that we are retrieving from our cases, that all the systems of VAT evasion or missing traders or conduit companies or brokers that are operating in the EU zone probably are using proceeds of crimes of organized crime. So suddenly we stumble in a very serious dimension of the issue. We are talking about also internal security. So this is why for us it's so relevant, the role of the auditors and the accountants in order to foster our early detection on one side and the possibility to retrieve money from the fraudsters. So this is one layer. The other layer is we talk about trust, and I'm not talking only about the trust of the public markets or the private markets, also trust among the professionals, because if you are an accountant of a company, you have a counterpart, you need to rely that the other side, the other accountant, is doing precisely the same type of quality of work that you are dealing with. And what is possible to understand is there are several situations where we have bona fides companies that simply see their business invaded by tainted companies. And this is a breach of trust that affects the entire ecosystem. So these would be my first two main deliverables for our conversation. Regarding the EU funds, it's also possible to understand that the auditors from the banks that are involved in loans that deploy this kind of development with the use of EU funds, they trust that the counterparts, the ones that request the loans, provide financial statements that are reliable. And at the end of the day, we might be confronted with active toxics from the financial institutions that are also involved in it. So it is a systemic issue that I think that deserves a very deep assessment, because these professions might be, without knowing directly, and I don't have studies or strong feelings about this, directly in money laundering activities with very serious breaches of security.
Right. So I think it's helpful that you've highlighted that idea of essentially the ecosystem of the financial information and everybody playing a role as that information is flowing through, and the handoffs that occur, and they have to be, with integrity on all sides in order for this information to be valuable by the end of the process, right? So I think that's a great key point. Pascal, your view on this?
So I would like to echo what Jens started with, which was you have a gray zone, of course you have a black zone, and black you have criminals, it's about the police, it's about the prosecutors, and so. Still, on that one, from a tax perspective, I think what's interesting is, when I started at the OECD fighting tax haven and so back in 2008, 2009, you had no accounting obligation in many countries. In many tax havens, they were not obliged to oblige the companies to keep accounting records of the company. And that's where you start with the dark side, right? So in Panama and many other countries, you don't have any more yet in the world which doesn't have a legislation, but you have a few which do not implement the legislation properly. So you have pure opacity, which means that you do what you want. Private companies, you hide what you want. We're on the dark side, and this one has recessed, I believe, except on the criminal activities, which again is for the police. What's interesting is the gray zone that Jens was mentioning. And on that one, indeed, as accountants, you don't want to be caught validating stuff which proves actually not being gray, but being black. So when you look at it, you pretend it's gray or it's white, and you end up with black. I'm not a prosecutor, I can mention cases, right? Jens, Germany, cum-cum, it resonates with everybody, right? The cum-cum. In the tax world, we had known about the cum-cum for years, and for tax officials, it was clear that this was fraud, but you had a debate, or is it fraud or not fraud, or it's just tax avoidance versus tax evasion, you know, what is legal, what is not legal. And I believe that's where the ethics, we're back to ethics, is so important. I mean, look at it and check whether you would be ready to stand to an interview with the FT journalist to explain that it's perfectly fine to just transfer the dividend for a few hours and take it back so that you make a big tax benefit. Doesn't make sense, right? It's an abuse. And what's interesting in all the cases of abuse, abus de droit, you would say in French, you don't know when you do it whether it will pass the test at the end of the day from a legal perspective or whether it will not, but from an ethical perspective, I think the doubt shouldn't be taken. Last remark is about trust. Erosion of trust, here I'm talking on tax matters, erosion of trust of the public. You have the tax geeks and the accountants talking about compliance. We comply, you know the sentence. Every time you have a scandal, you have a response which is, we comply with all the laws and the regulations of the countries where we operate. Which I translate in plain English as, we are not criminals, or we don't want to be criminals, but it doesn't say anything more. And that's where you have the erosion of trust by the public, which has resulted in one of the standards which was developed at the OECD, which is the country-by-country reporting, where companies are obliged to disclose, in addition to their financial accounts, where actually you don't disclose much on the tax front, where you're obliged to disclose your revenue, your profits, your tax accrued and paid, the number of staff, and the net asset on a country-by-country basis. And you disclose that to the taxman, and the taxman can share it with other law enforcement agencies. But the European Parliament a few years ago decided to make it public information, precisely because the public is away from the compliance approach and more about the fairness approach. And if your employee in Luxembourg triggers 1,000 more income than the employee in France, it may be because the Luxembourgers are 1,000 more times clever than the French. Being French, I wouldn't dispute that. But still, you may have something like a tax fraud issue or a tax avoidance issue. So you can see that the trend has been less confidence, less trust by the public, and more transparency, which may result in more compliance burden, which may result in a patchwork of legislation, because Australia is doing its own, and it's not stabilized yet. But this transparency, I believe, is a way to call on the profession to be a bit more responsible in their implementation of ethics standards.
Thank you, Pascal. I'm going to just identify a couple of statistics as well that we're talking almost like we're driving the decision-making associated with what is black, white, and what might be gray zone in the decisions we're making. The other thing that I think we all need to recognize is that this is approaching us too. Crime is coming towards us, and many times people, I think, don't have an appreciation for how close it might be. So a couple of statistics to give you insight. Internationally, for example, 70% of all money laundering happens through corporations. And if you think of the two professions that are close by corporations most of the time, you will probably identify accountants and lawyers. And so that means there's a high potential for people to provide services to corporations that might have other than legal means of actually funding their activities. And of course, you're probably well aware of the complex structures that can be introduced to basically cover off what a real business might be doing versus what the business behind it might be doing, and who really controls the business and who has control over the assets. Those are the kinds of things that are happening every day that we need to recognize. Another statistic which I find is compelling is around the types of crime that we face on an ongoing basis that are more prevalent. And of course, we can identify many, like drug trafficking as an example, corruption as another, tax crimes we've just talked about. Another growing one is fraud. And in some very developed countries that have very developed and strong legal processes and law enforcement, they will share numbers with you like 40% of all crime in this country is fraud, 1% of law enforcement assets deal with fraud. Just reflect on that for 2 seconds and realize that as accountants in particular on the front lines of business transactions, there's only 1% of law enforcement capable of dealing with what might be fraudulent within the economy. It's an amazing statistic to realize of how much is going on around us. That is a backdrop, as an observation. Go ahead, Jens.
May I just come back to
Yeah.
cum and cum ex? As a German, I have to respond to that. I just want to highlight an aspect which is very important in this context, and this is the changing environment and the changing judgment of the public or of courts without changing the law. Even you have the same legal framework, the interpretation of some business structures, models may change. What has been accepted or acceptable or reasonable or what appropriate 10 years ago might change quite quickly because there's a public perception, or it's another generation of judges judging on a structure which was okay-ish some years ago. I think this risk, it's a pure risk assessment also in the interest of the profession, of the professional accountant. Be aware what might be right today might be wrong tomorrow, and I think that is very important. Make your client aware of this perhaps dodgy situation. We are not yet in the criminal sphere, but we are close to, and that might be a risk for the client, for the employer, or for yourself as a professional, and for the whole profession. I think this risk assessment is very important and has to be renewed in a changed environment.
Can I step in just to say those two layers that you mentioned, for me, are crucial. Money laundering on one side, organized crime on the other side. What we are seeing is heavily legally planned crime. Jurisdictions are chosen because they are weak. They reveal weaknesses in the financial system. We have not tax havens, but we have jurisdictions that have lenient accounting systems, and legal entities are being placed there for a purpose. So we are talking about, we call them enablers. We don't have yet in our minds decided, but we have law practitioners involved. We have accountants involved. We have consultancy services provided that enables this situation. So legally planned organized crime leads to this. So, sorry, just to...
Highly sophisticated.
And highly sophisticated.
And very complex.
Yes. We are talking about gray areas. In Europe, we have this set of tools, the AML directives, also fighting the funding of terrorism. Accountants and auditors are submitted entities. So they need to perform all the duties of these directives duly transposed to the national systems that make part of the Eurozone. So this might be an interesting tool to understand if we are in a black, gray, or a clear area.
Yeah, and I think the next question might take us into a place is watching out for the changes in those kinds of things. So changing dynamics like you've identified, changes in clients, why are these things happening? What does it mean to me? What should I think about it? So let's look on to the next piece of this. How do we go about managing essentially what could be perceived as a tension between what we need to do from an ethical perspective to uphold ethics, to live according to serving the public interest obligations that we have, but also meeting profit and client expectations in that same world. How do we do that?
It's a challenge, yes, and as IESBA has developed these tax planning standards as an example, I think it shows that the professional accountant has a role to play in this field. On the one side, yes, serving the client interest is good. It is in the public interest to make the businesses profitable and to be up to date with all the challenges in the tax systems, especially cross-border. But at the same time, I think, talking about Cum-Ex, which is, by the way, a case of a law firm, of a magic circle firm, but that's just a footnote. So we have to discuss not only about the profession, but about services, I think. But I think this case demonstrates that those advisors, lawyers, accountants would be very happy if they have decided differently. And now we have to think about what should have been the thought process in such a situation. Addressing the threats, saying, okay, here is one interest, it's a big client. And then we talked about principle-based standards. Very easily we can use our code for that, because there's a threat. Are there safeguards? Are you transparent towards, I don't know, if you're talking to the tax director, are you transparent to the legal counsel inside, to the CFO or someone else in the hierarchy, to the independent audit committee chair? Are there processes where you can raise your issues? We heard a lot about this courage as a public professional accountant in business inside. There have to be a process. And that's why, coming back to our overarching discussion, principle-based versus rule-based, out of our outreach activities we saw, yes, we have all the principles, they're great, but some material to make it crystal clear how in a specific situation, as for example in tax gray zone, how to do the right thing, I think it's helpful. You could say it's not necessary, but hard cases are making hard laws, I'm always saying, and that means if an incident is happening, we have to demonstrate that our system in principle is working, and perhaps some people have deviated from that system. So that's why I think it is a conflict, it is a dilemma sometimes, but it's nothing new for the profession. Even in a classical, boring, audit engagement, you are sometimes in a situation where you have these different interests. The client wants to close the books and finalize everything, time pressure, but you have still questions. This is also a conflict. It's a big client. So the same is true in advisory work or in compliance work in the tax area. So we have the tools. Perhaps we have to explain it how in specific situations, and I think give living examples, educate people, encourage people to have this uneasy discussion perhaps, or difficult discussion.
And taking the time to exercise care and ask the next question that might actually start to unravel the situation that's in front of you. And Jose, I have a sneaking suspicion that from your vantage point, you see things through cases that have occurred where you can identify what might have been done differently and how that could have changed the result.
We are talking about a business of millions, okay? Gives money.
Yeah.
And we are talking about millionaire accounts. Mm-hmm. So where is these kind of interaction, there is a risk. And based on what I could see in the financial system, at least because I need to study this, we are talking about corporate governance. So the frontline managers, the ones that deals with the clients, need to be controlled by internal gatekeeping systems. So we are talking about ethical standards, we are talking about compliance, we are talking about accountability, we are talking about risk assessment, we are talking about internal control system that put all of this into place. Because there is a natural tension between trying to gain money from our business and to a possible overrule. So this is human. And I believe that this is a business with ethics based on the perception of several situations that happen are the key role for overcoming. So corporate governance, common corporate governance.
Right, right. And again, the ecosystem approach of
And
everybody within this system.
Precisely in the same direction, because otherwise.
Yeah. Now, Jens had mentioned professional skepticism.
Yes.
And I know that people that investigate some of these types of situations are always wishing that people had asked the next question and that their professional skepticism was at the fore of looking at the situation. Do you agree?
I do. I do. We have a toolkit, usually in criminal matters, we are presented with a dead body and we need to do a kind of autopsy, and we have a toolkit that allows us to deploy intrusive measures. And it is possible to understand that there is a mismatch between what we retrieve from our investigations, because it's possible to establish other kind of realities, and the realities that are shared with the gatekeepers, with the auditor's name. I'm talking about this reality. And yes, it is possible to identify that there is a mismatch. In our team, we discussed several times, what about the skepticism? Because the international accounting standards, formally, they were fulfilled. But at the end of the day, there could be anything that could be asked. I will not share my opinion about this, obviously, but just deliver to the audience to think about it.
Right. Pascal, your views and your thoughts on this tension, if we can call it that, and
But there
upholding
shouldn't be
ethics.
tension, right? So I was almost surprised by the question. There is no trade-off between making profit and providing the good advice. You should make money by providing the good advice that helps your client making more money. So there is no tension. If there is a tension, it's because there is a problem. And we can see, unfortunately, and I don't have the answer, that this problem is recurrent. And if I may be a bit provocative, I'm a tax guy talking to accountants. I do see in the next 5 years, one of the big accounting firms may be collapsing because of recurrent scandals. Let's be aware of that. I mean, as an observer, the tax guy looking at that, there are too many cases where you have press communique to say, we apologize, we're sorry, we complied with all the laws and the regulation, but oops, we didn't see that one. Oops, we didn't, because there is this tension. But if there is this tension, there is an ethical issue, which, for all the reasons we've seen, which is the gateway towards money laundering, which is the gateway towards criminal behavior by companies. Okay, you have the white zone, the gray zone, and through the gray zone that you get into the black zone. And I believe that there should be no trade-off. There is a trade-off. The problem is that there is a trade-off today. Now, to echo what Jens said, which I think is absolutely right, how do you get in the conversation? I would have maybe two remarks. One is, tax is too serious to be left to tax people. At some point, bring it to the room. There are some administrators here. You should discuss that in the room. It's been, I mean, almost since I started in the tax field years ago that you have campaigns saying, oh, tax should be brought in the boardroom. We're still there. It should be brought to the boardroom. I mean, they tick the box. You have sometimes a conversation, but it's just to tick the box. You should have a real conversation. And for the audits, that's the same. You have a big client asking you to close the book, you have skepticism, you have questions, you shouldn't leave it to the technical auditors. And very often, and I don't know about the Cum-Cum, but I can see the picture. You have the tax guy talking to the financial guy, and they settle the case. Should be escalated to the leaders, because the leaders, you need to tell them in 3 minutes what it is about. And this narrative will work or will not work. What's the risk assessment? So by escalating this to the board, to the CEOs, you may sort out some of the risk, and it's not happening. So when it's overly technical and you cannot make the judgment, it's because it's wrong. It cannot be overly technical. Any technical issue, the most complicated tax issues, can be explained to leaders in a few words, which reflect the complexity. You don't simplify, but you explain in simple terms the complexity, and that's where you bring the CEO to reflect, am I ready to speak to the FT tomorrow if I'm on the front page?
I think this newspaper test I'm calling is very important. And in the past, we have often seen that this discussion was ended by having a legal opinion from A or another opinion from B. That's fine formally, but if you are the advisor or the professional accountant in business, perhaps you should address this to the next level, the board, and say, you are writing in your sustainability report or in your GRI 407 or whatever, that you have a sustainable tax policy. Is that in line with that what your tax department or who else is proposing? So this critical mindset, not to say it's wrong, but are you aware, are you willing to take the risk? Because in this situation, also you as an advisor are transferring the risk to them who are responsible and not taking their risk in your own books, which is happening.
So that's that ethical foresight and ethical hindsight. The newspaper headline is the hindsight, right?
Yeah.
The foresight is stopping and being able to assess, what does this look as it goes through?
Yeah.
And am I able to live with what it looks like by the time it's done, right? Because that's where we are. The comment on tension is interesting, that there shouldn't be tension, but I want to raise one situation for you that is quite common in relation to financial crime that I think it probably does create tension, and that's changing circumstances. So for example, you work for an organization, you have a client, all of a sudden there's a new investor in the business, there's a change in suppliers, we're now doing business in another country, we don't know very much about that country, we're not sure about what makes it tick, we're into a new product line entirely, it's something that's just come about. Those are all changing circumstances that criminals in particular will assume that you won't have time to assess, which is perfect in their world because you're not watching the bouncing ball closely enough. What does that open you up to?
I think one experience is also that you're getting only a part of the information, fact and circumstances, and there is a little bit shopping attitude to use for this piece someone, and perhaps it's a neutral information and you give a neutral opinion, but you are not able or not willing, depending on your attitude, the full picture. That's again the question which you missed. The next question, what is the whole picture? What is the business purpose behind why you are going to 3 or 4 jurisdictions with a very complex structure? Is there a business reason for that? Or is it just to avoid, to evade whatever an obligation?
Yes.
I think that is the real attitude you have to have as an accountant, but not only as an accountant. I think also lawyers should be in the same pace.
Absolutely.
Or if we are dealing with jurisdictions where there is no regulation of the profession. That's why I said earlier, we should look more to the service which is provided. And the tax services in some jurisdictions are provided by non-professionals.
Yeah.
So that's a little bit the national issue.
Right. And Jose, changes like that, third parties introduced, things changing on the fly, that's common for cases that you would see,
Yes.
I'm sure.
If we are talking about inter-community transactions, this is common.
Yeah.
It's more than common. And yes, there is a risk regarding the VAT, fraudulent behavior. Once we are talking about the skepticism, we are not talking about schizophrenia, but we are talking about using the toolkit that emerges from the directives that suggest that you made a proper KYC once you begin your relationship with your client, but update this KYC. And there is also the know your transaction or know the transaction of your clients.
Right.
These could be certain kind of elements, namely, if you have a client that suddenly stumbles in a suspension of a wire of a bank, this should raise awareness. You cannot simply leave to the other side and say, okay, please could you justify me why the supplier is placed in France and we are wiring money to Dubai? This is not possible, but this happens. So skepticism means also this, a constant approach regarding
Right.
the position of a gatekeeper.
Right. really being vigilant and aware and on top of it. We're going to work backwards because we're out of time, and we're going to just do the quick snapper, so it has to be really, really quick. Pascal, when you think about the bright lines and they start to blur, what is the role of ethics?
Say it again. The role of ethics. It's just the safety net, the final test. Does it work or not? Can I explain it to the FT or to my 15-year-old? I really believe that's about it, and we should all do that in all the decisions we need to take, which are accounting and not accounting. That's all the training you see on compliance and so for all the staff when they join. And the higher you are in the hierarchy of accounting, and so the more you need to go back to the basics. Does it pass the smell test or not?
Right, thank you. And that's a perfect segue into the poll question. So if we might be able to see the results of what came from the poll question in terms of ethical foresight and hindsight. See what everybody answered? Interesting. So 63% said yes, 62% said, or 63 said yes, 62 said no, 14 were unsure. So interesting. So I think that was a good question to ask, and I'd like to, on behalf of all of you and those online, thank our distinguished guests up here today for an enchanting conversation. You know it could go on much longer than the time that we have, so thank you very much for the opportunity.
Thank you.